Hi guys, my name is Adnan Hasbi and I'd like to welcome you to another episode of Rambling of an Analyst. In today's episode, we're going to talk a little bit about the year-end rally. One of the reasons why I'm creating this episode is since it's coming towards year-end, I think this episode is relatively timely, so as you guys can take advantage from this information. So how I structured this episode is, number one, I'm going to talk about what a year-end rally is. Number two, we're going to look at the historical proof of whether this happens or not. And the final thing is we're going to look at what actions we can take as investors. So let's break it down. What is the meaning of year-end rally? Okay. So a year-end rally is pretty much year-end, as in the 31st of December. The stock market tends to move up towards the 31st of December. So with that, let us look at some charts to prove this hypothesis. So the first chart shows the last 2 weeks before the 31st of December. And this is year 2015, 16 and 17. Let's look at the charts and see how the KLCI moved during this period. So over here, we can notice an upwards bias for chart number 1. Chart number 2, it kind of drops and then it goes up again. Chart number 3, it goes up all the way. This is for year 2018 and 2019. For 2018, again, you can see an upwards bias. And 2019, it goes up all the way, it drops a bit, and it goes up again. So looking at historical trends, we can see that historically, maybe 7 out of 10 times, the KLCI tends to rally. So when I first heard about the year-end rallies from a lot of my relatives and how they used to buy shares or stocks just to enjoy this particular rally, I was very curious, and I was always the guy that likes to question many things. And this is one of the questions which I always had even when I first joined the industry. So I remembered asking a lot of friends, what is the meaning of year-end rally and why did it happen? And when asking these questions, a couple of them told me this explanation. One of the reasons, so this is one of the reasons, is that asset owners like EPF and QUAP, they sometimes outsource their funds to external fund managers. So this is to enable a vibrant fund management industry. So maybe they outsource this fund for Maybank, CIMB, or maybe MBank to invest in equity. So at the end of every quarter, what tends to happen is all of these fund managers will report their results to the asset owners, which is EPF and QUAP. Over here, all of them will give a report card on the realized and also unrealized gains. And say if the cutoff is as 31st December, many of these fund managers are inclined to push up some stocks so as to show good numbers in their report cards. And one of the reasons why they want to have a good report card is assuming if they are the top fund manager for that year, or maybe for the next 1 or 2 consecutive years, what will happen is maybe EPF or QUAP would reward them with more money to invest. So if you are in the asset management business, what you want to do is to increase your AUM size. The more your AUM size, I guess that's a good thing, which will give you a positive impact on your salary and your bonuses. Okay, so to conclude, what should one do? Over here, what I want to say is, even though the KLCI has 7 out of 10 chance to move up, and in case if you're wondering how I got that number, I just kind of plucked it from thin air. But let's just say it's a 7 out of 10 chance of moving up. And we can see from historical trends, it does not necessarily mean that our stock may move up also. So this is a word of caution I want to send to you. But having said that, I just wanted to share with you what tends to happen in the market. And with that, thank you so very much for watching this episode, and I hope to see you in the next episode.